In this video, I am going to show you a medium and long-term strategy using the money flow index, MFI, and a smooth moving average. The strategy can be used in the time frame from 1 inch onwards in forks, more precisely high volatility currency pairs such as the Euro-Japanese yen. The first thing we will have to do is select the MFI indicator. We must configure this indicator in 23. Let us briefly explain what the MFI indicator is. The money flow index or money flow index indicator is an oscillator that is displayed in a value range from 0 to 100. If the indicator is below 30 or less, it is said to be in its oversold zone, but if it is around the value of 70 or more, it would indicate that it is in its overbuy zone. The MFI is an indicator that shows how money flows. Its interpretation is the same as the RSI, but with the only difference is that the MFI considers the volume. Like the RSI, you have to consider the divergences between the MFI and the price. If the price spikes higher and the MFI spikes lower, the market is likely to go down, and if the price spikes lower and the MFI spikes higher, the market is likely to go higher. Once this is explained, we will have to select a smooth moving average, but this moving average, we will not put it on the price chart. We'll put it inside the MFI indicator. To do this, we go to the 3 points of the MFI and select Add Indicator. Then we look for the smooth moving average. Once added into the MFI, we will see that this moving average is the average of the MFI values rather than the price. You just need to set it to 50 periods and that's it. In addition to this, I recommend that you add a MACD indicator to use as a filter, since this strategy could give us many false signals. In this MACD indicator, we will change the values to 10 and 20. And we will deactivate the 2 lines. Now, let's show examples using this strategy. To carry out a purchase operation, we will wait for the MFI line to cross the moving average line from below to above, and at the same time that the MACD is above 0. If this is true, we will execute the buy operation. We will put the stop loss at the last minimum, and our take profit at a risk-benefit ratio of 1.5 to 1. That means that we will risk 1 to try to get 1.5. If the MFI breaks out of its oversold zone with a bullish slope, the buy signal is much stronger. Let us now see an example of a sell operation. To carry out a sell operation, we will wait for the MFI line to cross the moving average line from top to bottom, and at the same time that the MACD is below 0. If this is true, we will execute the sell operation. We will put the stop loss in the last maximum and our take profit in a risk-benefit ratio of 1.5 to 1. That means that we will risk 1 to try to get 1.5. If the MFI breaks out of its oversold zone with a downward slope, the signal will be much better. Let's look at some more examples. And ready. I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.